It seems like the weather has just been interesting one year after another for, I don't know, 4 or 5 years at this point. It's been a late growing season. What's your early assessment of the crop and its condition, what it means to the marketplace?
I think in the case of corn, for the corn that's planted and up, it's probably in generally pretty good shape. And I think still has very good yield prospects at this point. I think the bigger question is the unplanted acres or the replant acres for corn. What kind of acreage might we lose, or what kind of yield might we lose on the replanted acres? I think the consensus is that planted acres of corn might fall 3 to 4 million acres short of intentions of 97.3 million. And that's probably a reasonable thought at this point. And then you start asking the question, what kind of yield do we need on those acres to meet prospective consumption for the year ahead? And rough numbers would say, if you believe USDA's kind of generous forecast, anything above 150 bushel corn would be an ample supply if we lose 4 million acres. I think at this juncture we have prospects for yield at least at that level, and probably considerably higher.
What does it tell you about current price of December corn in that case?
Under the scenario that we have 155 bushel corn or better on 86, 87 million harvested, I would say December corn is a little on the high side, maybe not by a lot, but I'm not sure we would need cash prices above $5 under that scenario, and right now we're slightly above that. So I think it would give us some downside if that kind of crop materializes, but I wouldn't look for an extreme decline from the levels that we're at right now.
In your weekly outlook post from a couple of weeks ago, you talked about soybeans just prior to May 31st, and the idea that the 75-cent increase in the price of soybeans may have been overdone, given that soybeans may or may not be at late planting. Has that changed much at this time?
Not a lot. I think there is some yield penalty for late planted soybeans, but it's certainly not as great as the penalty for late planted corn. And so I think we have lost some yield potential because we have an unusually large amount of the crop that's going to be planted late, probably the most since 1996. And so that's probably trimmed yield prospects, but I think we're still probably looking at 43 bushel beans or better for the U.S., and we might actually pick up a few acres of soybeans depending on what happens to the intended corn acres. And so I think we still have prospects for a very large soybean crop. And this rally that we've seen that's pushed prices back above the spring insurance price may be just a little bit overdone, but again, at this early juncture, I think it's legitimate to have some production risk reflected in the market.
There's production risk reflected in the market. Are you also of a mind that producers should take advantage of some of that pricing opportunity?
Again, I always fall back, as you know, Todd, on kind of the insurance prices as a benchmark for making marketing decisions. November soybean futures temporarily moved well above that insurance price. It's dropped back down a bit now so that we're just marginally higher. And so I'm still of the kind of the mind that we don't need to be real aggressive if we have fairly high insurance coverage at this level on both corn and soybeans.
And finally, your view of supply and consumption for soybeans for the 2013-14 marketing year.
I think we're going to continue to see very strong consumption of soybeans. A lot of talk about how many soybeans China really needs and how many South America will be able to supply. I think that's a very solid demand market, and we will see exports hold up very well. Maybe a little bit of weakness in meal and oil exports, but should see domestic consumption of both of those products supported by, one, biodiesel production, and two, some increase in livestock numbers. So I see a pretty strong demand base and not much of a buildup in inventories of soybeans during the year ahead. So it says from a historic standpoint, we still expect high soybean prices next year, maybe not the $14 plus that we experienced this year, but certainly well above long-term average.
Thank you, Darrel.
Thank you, Todd.